Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. You see, often the challenge is we take our precious time, we go to work, we get a paycheck in order to eat. But imagine a life where you could have money make you money. You could work a little less if you wanted to, spend it with family, friends, and so on. That's what Everyday Investor Show is all about. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. 1, what's the return on investment? 2, when do I get it, along with the money that I put in? 3, what's the minimum investment amount needed? And 4, what is the downside? What is the risk? Super excited about today's show. We're talking to my good friend. Wait for it. We'll be right back. Coming up, we're talking to Peter Politis, and he's teaching us all about real estate development.
This is the kind of opportunity that as long as you have the time horizon, most people think, oh my God, I can't even imagine investing for 6, 8, 10, like that's whether it's in your RSP, whether it's for a portion of your portfolio, these are multipliers on your capital.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to my good friend Peter Politis about real estate development, let's find out what's happening in the world of stocks. Over to you, Omar.
Thanks, Rav. Omar Khan here, guys, with a weekly market update. Now, the markets have been doing really poor in September. We finished the last week of September, worst month since March of 2020. So pretty bad month. But we know historically, statistically, that September is the worst month of the year. Now, what we're going to look for going into October is how strong are corporate earnings, meaning how much money are companies making. That will ultimately determine how much the market goes up or down in the future. Again, we think corporate earnings are going to come in pretty strong. Companies are able to make a lot of money. But the bigger concern is right now inflation and also companies looking to hire and not enough people willing to take those jobs. That could be a bit of a headwind. But besides that, we think those issues are temporary and corporate earnings will be strong, and we are confident about the markets on a go-forward basis. Back over to you, Rav. See you guys next week.
Thanks, Omar. Peter Politis, it's always great to have you on the show. Thank you so much for being with me today.
Real pleasure, Rav. It's been a long time. Nice to see you again, even if it's through the lens of a camera.
Yes. I mean, but we're starting. We're starting to hang out. Here we are in the fall, and it looks like COVID is, knock on wood, kind of behind us, and look forward to seeing you, giving you a hug. I miss you.
Absolutely.
Yes. For those that don't know, Peter Politis, he's a few years over 40 now, I think, but he was top 40 under 40 for just being a real smart guy. He's a bigwig at Greybrook Capital. And Peter, thank you so much. It's been a decade that we met, and I got to start investing with you and working alongside with you in Greybrook, and it's just really been a lot of fun. My family thanks you for teaching us, and can you believe it's been 10 years?
I think the time flies when you're having fun. Adage holds here, so I can't believe it. And I'm not quite 40 yet, Rob. Don't age me just yet, please.
Okay. So when you were top 40 under 40, then you weren't even close to being 40.
It was 3 years ago. So no, I was about 35 or so when that happened.
No, that's great, man. Surrounding yourself with lots of great people. I feel privileged. Why did you bring Rav in?
I think I say this a lot. And for all these things that we do, where we get some accolades here and there, it takes a village of people doing a lot of good work. Sometimes you only know a name or two or recognize a face or two in the process, but there's a village of people doing some outstanding work to help us do what we do, and it's a privilege working with them every day. And you.
Well, thank you. Greybrook Capital, man, we do a lot, Peter. You building, I mean, all over North America. You know, whether it's in Quebec, whether it's in Ontario, whether it's in, you know, the state of Florida, you know, Texas, Atlanta, Denver. We're building high rises. We're building, you know, what we call society living, kind of social living. We're doing long land development deals on the low rise. Can you explain a little bit for the viewers? You know, I like to kind of break it down to yours truly kind of barely finished high school, and I like to just kind of make things simple, Peter. And can you kind of just explain what social living is and what a high rise is, what low rise is? Kind of just talk a little bit about that, and then let's focus on, you know, maybe the long-term low rise on today's show.
Yeah, so kind of Greybrook's general investing theories, we focus on investing in development-based stuff. And when most people think about investing in development, they think about buying, you know, pre-construction homes or townhouses or condos or whatnot, and that's how they typically access or invest in development. We look at it a little different. We basically allow individual investors to come in and buy land in partnership with us and some of the largest developers in North America, and share the development profits that are made through essentially manufacturing. It can be a home, a condo, or in your case, you mentioned the society rental buildings. It can be done in different stages and different lengths. So at the end of the day, you know, our job is to come in and be owners of land in partnership with these developers and share the development profits. And we can do that in many different ways. Like our focus is on creating kind of diverse portfolios for people. So it's like, you know, you don't just invest in one stock, or you can eat your favorite food every night for dinner, but you'll get tired of it eventually, and it's not necessarily good for you. So having that portfolio-based stuff is what we do. So, you know, condominium development is, you know, buying land in core parts of Toronto and building high-rise and mid-rise buildings. And we have a low-rise development, which is broken down in a couple different things. We have what we call greenfield, and then we have infill. The infill is kind of like, you know, everything's built out around us, and we're coming in and we're rounding out a block or a community with townhouses or homes. And on the greenfield or the longer term development stuff is kind of stuff that's on the outskirts of a city, and there's going to be road planning going on, and there's going to be schools that are going to be built and parks and all that stuff. And then lastly, we have our society, which is building rental developments, like you said it, in South Florida, in Atlanta, in Denver, places like that, where we start by, you can either rent by the bedroom, or you can you know, have normal traditional rental units. And we try to create a social living community where I kind of like to equate them to living on a cruise ship full time. It's kind of like program living, and we kind of joke in our society buildings that we cure loneliness.
And that's a good thing, given what we've all been through in the last, you know, 18 months. No, Peter, it's fantastic. And, you know, as everybody knows, I'm invested in, you know, 9, 10, 11 different properties, or deals rather. There's some other things that you do, but, you know, I remember great returns on a few condos just on the lakeshore. And then, of course, I'm involved in, you know, a big master plan, greenfield kind of deal in Fergus. And so I was on a low-rise master plan, and then also, you know, and that's just two that I'm throwing out there. From the investor profile, we're watching this show, we're talking to, you know, Peter Politis, who's one of the smartest guys I know when it comes to investing. What do I need to look for when it comes, do I want a high rise? Do I want a low rise? Do I want infill? Do I want greenfield? How do I think about this?
So let's just back up a second. Kind of our general goal is to double our investors' money every 4 or 5 years. That's kind of what we try to do from a return standpoint. And most people who think about development may not necessarily understand the scale of the types of developments that we're talking about. Building a home or 5 townhouses is different than building, you know, a 50-story building or 1,000 homes in Fergus. And that's the kind of scale that we invest in at the end of the day. And we allow individual investors to basically access these. You know, we have over $20 billion of development going on right now for a minimum investment of $25,000 per project. And that can be through cash, RSP, TFSA, different vehicles. And for us, you know, we try to build portfolios for our investors. And it takes a different timeline to do a infill townhouse project than it does to do 1,000 homes in Fergus, as an example, or a 10-story condo building versus a 50-story condo building. So we try to create these tailored approaches, understanding, what are your goals as an investor? What are your time horizons for investing? Unfortunately, you can't really do development in, let's say, 1 or 2 years. So if you sit there and say, I need to have my money back in 12 months, development's not for you. But if you're looking at growing capital, multiplying your capital, making long-term sustainable developments, I think there's a place in it for people's portfolios. And
there is kind of a cash flow component if you're in multiple deals, putting a little bit in different ones as they exit over time.
Yeah, I mean, I think that's something that, myself and my family, who are investors in all of our projects, really kind of found out over the long run, where, a non-cash flowing investment like development, where there isn't yield to be paid on a monthly, quarterly, or annual basis. If you have enough of these projects every year, every quarter, now we're seeing projects finish and pay out, and now I'm redeploying the money that comes out on a quarterly or semi-annual basis into new projects, and we've kind of turned into those things over a number of years of investing in them.
And talk a little bit about your partnerships. I mean, we're not working with Rav's cousin Vinny when we're developing here. We're working with the biggest, the best. Talk a little bit about that and the importance of that.
Yeah, I mean, I think that's a really good point. I kind of like to think that investing in execution and anything that you do is really important. Obviously, us, Greybrook, and entire organizational infrastructure has a tremendous amount of experience, been involved in over 90 developments, talked about $20 billion. But the partners that we partner with and then co-manage these developments with are some of the largest developers in North America. We have guys like Tribute Communities and Fieldgate and Treasure Hill and Citizen and Marlin Spring. And we have public entities like First Capital REIT that we've partnered with. I mean, I think the key for us is how do we partner and work with the biggest and the best every day? The people that don't necessarily need our capital to work with, but through the efficiencies and through the knowledge that we bring to the table, and then together our partnership can yield higher profits and better results for everybody.
And so you already kind of answered the first question, on real estate development, we're looking at, on an annualized basis, a return of, projected returns of around 20%. You mentioned you try to double the investor's money every 4 to 5 years.
Correct. And I think that's a function of picking the right project with the right margin. Those are very achievable returns and results.
And what is minimum investment to be able to invest with Greybrook? And by the way, I mean, I think we're in 30 to 40, different investors from 30 to 40 different countries and 7,000 investors. Is that right?
Yeah, we have now over 8,000 investors in over 30 countries. Currently, we report in multiple different languages, from Mandarin to Hebrew to Greek to English to different stuff. I mean, we've been fortunate enough that over the time, we've put our heads down and worked hard for people, and then over that, the number of people they get to work with grow and multiply, and that's where we've been fortunate enough to be at today. I've been doing this now for 17 plus years, and it's been a privilege, and it's been a lot of fun.
Yeah, no, that's great. So minimum investment would be?
The minimum investments are $25,000, and not in increments of $25,000, but a minimum. And it's important for people to know that there are big and small investors in everything we do. There are people that invest $10 million or $20 million in a project, and there are people who invest $25,000 or $50,000 in the same project, but all investors get the same terms, conditions, returns throughout all that.
No, that's great. Pete, it's great to talk to you, and let's talk more, kind of break down, and we'll focus on the low rise and kind of, as you call, greenfield, kind of the longer deals when we come back from the break. We're talking to my good friend, a smart friend, Peter Politis. We're talking about investing in real estate development. Don't go anywhere. We'll be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. Before we continue on with Peter Politis from Greybrook, let's find out what's happening in the world of mortgages with Kyle Ford. Over to you, Kyle.
Thanks, Rav. Today, I want to talk about payment frequency. So many people think a mortgage is a mortgage is a mortgage, but there are so many considerations when it comes to customizing the right solution to you. For example, you can pay weekly, bi-weekly, or monthly. What's the best option? For many people, they choose to pay weekly or bi-weekly because it accelerates the amortization and it's like a forced savings plan. It's making them put the money on the mortgage. Now, another consideration to make here, and what I recommend for many investors, is a monthly payment. The reason why a monthly payment is effective is it holds cash back in the event of emergency, as well as it gives you the ability to make lump sum prepayment privilege. So these are the ability to pay lump sum with everything going towards principal. When it comes to this, there's no right or wrong answer, but getting the right advice is the most important thing. Reach out to myself and the Kyle Ford Mortgage team for any questions on this. Thanks. Back to you, Rav.
Thanks, Kyle. Appreciate it. Peter, it's great to talk with you. It's great to talk how to make money with you. And so we've been talking about investing in land development, real estate development. Of course, there's, as we talked about, high rise, low rise, really just talking about the different vehicles of how we can make money. But what's, you always are nurturing me. I want you to talk to all the viewers. What's kind of things where people don't know? Like, where is the billions of dollars that these developers, that they make? Where is kind of a sweet spot for you? I mean, all the deals are great, but there's some knowledge to be to put out there.
Yeah, I think the most common general thing that people gravitate, investing generally, is in the shortest term of the investment. How's the fastest way I can get my money? And that's like human nature and it's normal. But, and we do stuff, we do projects that are 2.5, 3.5, 4 years, and that's short in the real estate development world. But, you lose out on some of the added benefit of real estate in the shorter deal terms that you don't get, that you get in the longer terms that you don't get in the shorter term. So, we some of the greenfield developments, when you're buying stuff that instead of it being already approved or ready to start selling homes or townhouses or condos in a year, you might have a 3 to 5, 6 year planning period. And that involves many different things. Now you're selling a house 6 or 7 years in the future. And the value of time with real estate, and you have a land base that doesn't increase in cost, but you have values that will traditionally go up over time, your ability to make a much larger profit margin than something that's ready to go in 1 or 2 years is much greater. And that's something that we've talked about in our experiences. And Fergus, you're an investor. When we started selling houses there, we were selling houses. We thought we were going to sell them for $350,000, and now we're selling them for $1.2 million or $1.3 million.
No, that's amazing. So what you're saying is, when you say greenfield, we're talking about the raw land kind of aspect. So we buy the land here, and you're saying sometimes it can take some time. Let's just throw out 4 to 5 years just in the planning before we even start to build. What is planning? What does that mean, planning? It's not just a few people sitting around a table and thinking it out. What does that mean?
Yeah, it's a very collaborative process with anything from the councilors to the regions to the municipalities to these different things. And that can involve the types of housing we want to build. It can involve services, sewers, water, schools, parks, determining all those things as these cities grow outward as opposed to upward, like condo development, takes a number of years in some cases. And in your little scale, something that I'll tell you is you're buying land at one end of the scale when it's 4 or 5 years from ready to go, and you're buying land at the top end of that scale 5 years later when it's approved, ready to go. So that's additional margin and profit that you could gather from going through that process.
No, I love it. Okay, so we buy it here, and so there's money to be made just on the planning, and then from there, of course, this is where a lot of people, to the sales, this is where a lot of people jump in. But what I hear you saying is there's something else out there. Why not, as an option, buy here so we get to maximize, maximize, maximize. I'm buying at today's dollar, and we're selling, from when we've finished our planning to construction, that can take another 4, 5, 6 years.
It can be, depending on the size, it can be 1, 2, 4, 5, depends on, are we selling 100 homes? Are we selling 1,000 homes?
Yeah.
But, and probably if you wanted to make the scale a little better, it's probably a little flatter after the approval process in terms of the profit as it is prior to the land being approved, right?
Okay, let me just say that, because that's something, again, you're always nurturing me. You're saying from land to build is probably a lot higher, and this one is a little bit more. So even more reason to kind of get in. So when somebody talks to you about a 8, 9, 10, 12 year deal, to Peter Politis and family, that's very exciting because you're making all this upside.
Yeah, and I think what most people don't understand is that is probably some of the hardest land to find. We have, to say there's a land grab that happened in Toronto, in the GTA, I would say is an understatement. Some of the well-known billionaire families that this is how they've made billions of dollars. And at the end of the day, this is the kind of opportunity that from, as long as you have the time horizon, most people think, oh my God, I can't even imagine investing for 6, 8, 10, like that's whether it's in your RSP, whether it's for a portion of your portfolio, these are multipliers on your capital that really at the end of the day, as long as your money continues to work for you, you're happy to invest it. If it's, I needed to buy a house or a boat, or I want to spend it because Rav and Peter are going to Vegas and betting on black, whatever that might be, that at the end of the day, if you have the time horizon, those are the highest margin and the highest return deals that exist in development.
And I just want to be clear, because there's over here, when we're looking at the land, I mean, there's a lot of due diligence that is done prior to even executing on that. We're not talking about buying, grandma's farm and, and we're never going to be able to build on it because the municipalities say that we can't, and, swampland, so to speak. We've already done a lot of due diligence here on the raw land. And so we know what we're doing 10, 15 years out.
Yeah, I think that's a great point. Most people, I take for granted that people, we're a professional organization of over 70 people who live, eat, and breathe this stuff every day. There's people out there who go buy land in Greenbelt or who have different entitlements and don't understand that process. We've never bought a piece of land and not gotten the entitlements that we wanted to, because when you do the due diligence up front, when you understand what you're doing, what you're buying, in what cases, time can be a risk. It took a day longer or a day shorter to get something approved, but we're not going to be denied eventually getting the approvals to build what we want. And typically, time adds value to these longer term deals. We look at some of the housing that we sold 5 years ago. If we had that same cost of land 5 years ago, and instead of selling that house 5 years ago, we sold that house today, we would be making exponentially more profit based on where values. I'm not saying that values will always go up, but the truth is that over the long term, in a place like Toronto and the GTA, I do believe that they're going to go up. There's a real supply demand issue, and these are the highest margin deals. And that's probably one of the things that I talk a lot, because someone says, oh, that's a great townhouse development or a single, and it's going to be done in 36 months, and that's great, and I want to do that one, and that's fine. There's a place in that for your portfolio. But these are this is where the generational wealth in real estate and the magnitude of wealth that you think about when thinking about some of these multi-billion-dollar developments are made.
I mean, isn't it, Pete, isn't it like anything in life, right? We want immediate gratification, right? I want let me put my dollar out and give me my $2, as opposed to let me put my dollar out and give me my $15, over some time. And it's interesting. And they're all good. There's nothing wrong with a 2-year townhouse, deal. But what I hear you saying and what you want to do in terms of educating the viewers is don't be afraid of the long ones. That's where really the big money is made, because you're getting the upside from land to planning to construction. And we're looking, when you invest originally, at a price that was 10 years ago as opposed to when we sell. And that's where a lot of the upside
is. The big key is that there's only so much upside you can get in a market buying something and selling it, 12 or 18 months later in terms of value. But when you're selling it 3, 4, 5, 6 years later, the added passive appreciation in the market to go with the active value that we're creating by taking it through the planning process is like this, this factor that exponentially increases your returns.
And what I love most about it, as much as you would allow me to walk around with my boots and my hard hat, is I don't need to do anything. I truly am a passive investor when I'm partnering and investing with Greybrook.
Yeah, I mean, I think that's one of the things, especially in my world where, time is so precious between work, family, and all that stuff. Most of real estate, to some extent, is you work for your money. It's not just your money working for you. It takes time, hour, landlord, tenant, fix this, got that, mortgage, this, that bounce check. People usually value their time at zero. I'm like the complete opposite. My time is the most valuable thing that I have. So when I'm getting a return, I need my money to be working for me and not working for my money. And that's one of the focus things that our platform in Greybrook and our investing and development allows to do. It's truly once I put my money in, I don't have to do anything else. They can't ask me for anything else. I don't have to do anything else. I don't have to go get a mortgage. I don't have to go get a tenant. I don't have to change a light bulb. You want to come to a groundbreaking ceremony, I'll give you a shovel. But other than that, there's no work that you have to do.
No, I love it. So what's what's on the horizon? We're still sticking with opportunities like this? We're still doing high rises. We're still doing the social living, society living. We're continuing on that. We're even doing value add apartment buildings. Is in the Greybrook portfolio as well.
Yeah, I mean, I think it's important that when we meet with people that want to invest, we get to understand them very well about their time horizons, investment horizons, goals, and we create these tailored portfolios for people so that they can have a little bit of everything, so that they're insulated. The same person who's buying a $10 million penthouse in Yorkville isn't buying a $500,000 townhouse in Lindsay, Ontario, isn't buying a $4 million estate home in Kleinburg in King City, and isn't buying a condo in Liberty Village, as an example. And our job is to create that diversified portfolio to insulate risk and really deliver the long-term returns, because that's probably the best thing I can say about real estate development and investing with us, if you do it right, is that the ability to multiply your capital is material. And if you have enough time to do it, it's something that can generate a lot of total dollars if done right. And that's really important, because we kind of have the financial joke when I speak to my friends who are in banking that I can't eat IRR, right? Like at the end of the day, it's how much money have we actually made. I go to the grocery store and I buy food with money, not with percentages. And that's something that we've spent a lot of time understanding, that when we take on this amount of time for our money, we want to make sure that we're rewarded with total dollars.
Love it, love it. For those that are watching, you want more information, please reach out to the Greybrook Capital team. All the information's there on the screen. Peter, yes, time flies when we're having fun, when I'm being educated. Thank you so much for being on the show. Really appreciate it.
It's always a real pleasure, and hopefully we can grab dinner or drink soon in person.
Yes, I love that. And thank you guys for watching. Without you, we would not have a show. Make sure you tune in next week. Same place, same time. Honey, love you. I'll be home soon. Bye, everyone.